Well, Hindustan Zinc is going to be in focus for a lot of factors, right? Overnight, you have silver prices that had spiked up. But we'll connect with the management to discuss what went on with regard to the capex that they have announced and how do they see things panning out on that front. And besides that, we'll also wait by because Vedanta is likely to sell close to 1.5% in the companies. And Hindustan Zinc is our next management on the show. The company announced its plan to set up a 250,000 integrated zinc metal complex at the Bari, Rajasthan, which will amount to a capex of around 12,000 crore rupees. Now, the capex that they have mentioned will be funded by a mix of internal accruals as well as debt. To help us out with how things will pan out for the company and what is the longer-term vision, we're joined by Mr. Arun Misra, the CEO and whole-time director at Hindustan Zinc. Hi, Mr. Misra. Good morning and good to speak to you. Well, congratulations, actually, because the last couple of quarters I've been pushing you. What about the capex plan? And this time around, you have announced it. But the street believes at 12,000 crore for this kind of an expansion is on the higher side. Can you justify it? Why is it 12,000 crores for such a small capacity?
Oh, so this capacity is not just a smelter. This capacity includes, your another roaster, melting casting, fumer. No, earlier days we never used to build smelter with a fumer. Now we have taken fumer from the very beginning, and along with, of course, leaching, purification, cell house. At the same time, we'll put up a mill for processing of ore, and then, of course, mining expansion. So altogether, 12,000 crores for creating this capacity from mine to smelting and 250,000 tons of metal. It's a good money, and to us, it's a benchmark capex that we are proposing.
Okay, all right. So you're justifying it by saying it's mining till smelting. Everything is included, and that's why the capex is at this number of around 12,000 crores. But if I take phase one, which you've announced of 12,000 crores, and I take phase two, put it together, that will move to what? Approximately 30,000 crores of total capex, phase one and phase two put it together?
So that number we have not yet frozen because phase two will see, say, 450,000 tons of zinc smelting. It will also have 200,000 tons of lead smelting, expansion in mines, putting up new mills, some debottlenecking of existing mills, and also another 750,000 tons of silver refinery. So I can't put a number tag to that, but we are working on it, and I think in about 45 to 50 days, we should come back to board and then maybe make an announcement.
Mr. Misra, if I got that correct, you're saying 45 to 50 days. Just to reconfirm, so this phase two of capex will be announced within the next 2 months?
Absolutely, absolutely. Because we as I said, in a manner of 2 to 3 months, we will make entire announcement for 2 million ton project expansion. We have taken this strategy this time because we finish one part and then make an announcement, take board approval, then finish another part instead of waiting for entire 2 million ton thing to be designed and done and all that.
All right. With regard to the phase one capex, how much of progress have you already made? Have you already ordered the machines for the phase one capex?
Yes, immediately it will start. So now that we have the board approval, so it's maybe another 10 to 15 days, we should intimate the business partners who are supposed to work on various parts of that. And then, yes, we should be able to hit the ground once regulatory approvals are in place.
All right, Mr. Misra, you generate solid cash, but you have said that this 12,000 crores will be a mix of funding, the split between debt as well as internal accruals. Break it up for us. How much of debt will you take on your books?
It's roughly about 50-50 only. So we will do that. Debt we will decide depending upon how we are progressing. See, roughly in my calculation, we do about 10,000 crores of PAT year on year. If we do that for 3 years to 4 years, it's about 40,000 crore we are talking about. So we shouldn't be there, and this will be also spent over about 4 years. So we have enough of internal accrual power to fund the project, but also we will have to take care of strategic interests as well. So we will take some amount of debt, maybe up till about 40 to 50% of the project cost.
All right. Well, if the focus now shifts to expansion, then does the dividend payout that the street has been very, very excited about in the last couple of years, will that now take a backseat?
So dividend is a matter of a board to decide. But however, this project we are doing for creating more and more value for the shareholders, whether it is through the dividend or is through the market upside, both ways. So as of now, we will have enough firepower. See, we look at our balance sheet, net debt, there is no debt being there. So overall, we have enough of money available for whatever way the shareholders decide to distribute.
Mr. Misra, if I look at a 10-year, average volume growth, it's been very, very subdued at less than 2%. But now the volume growth in the next few years should be better once this capex sees the light of day. However, in the near term, will you change your volume targets that you've already laid out for FY26?
No, as of now, FY26 volume we are not revising, and that we'll have to wait after the H1 performance. We will revise anything there.
Okay, all right, Mr. Misra, we appreciate you joining in, detailing that capex plan, and we'll wait by to see that large trade that we're expecting with regard to Vedanta selling 1.5% in the company.
All right, interesting conversation there.